Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. Thank you so much for joining me in today's video about the Death Cross, Wyckoff distribution, potential Wyckoff accumulation going forward, as well as the 4-year cycle, as well as Bitcoin's price predicament at present. All these perspectives jumbled together just to give you guys a broader picture of understanding going forward, as well as just understanding what's going on in Bitcoin's price action at the moment. Subscribe to the channel for more videos like this in the future, and let's dive right in. So macro consolidation is what's going on in Bitcoin's price action between 39,000 and effectively 29,000. And you can see that recently we've been able to set in a new low relative to the low that was set in the 53% crash since that distribution from arguably a Wyckoff distribution range. So we've been able to really dig deep and tap into that historical liquidity that we tend to see being tapped into. Earlier this year, we saw 29,000 get tapped repeatedly, even the lower 29K, because we saw this 3 times in a row, 4 times in a row, in fact, even performing a downside deviation before effectively just rebounding from there. So we've seen that again, once again here. So we're still just macro consolidating. And if we break towards the upside, then we're probably going to see a rally towards the mid 40Ks just to potentially test this Wyckoff distribution range, the bottom of it, as a new resistance. And then we'll see what happens then. Is it going to be a new resistance, or are we going to break past it going forward? I talked about this in a previous video. But of course, if we break down from 29K, then you can start to look at a different 4-year cycle level, because we have 3 4-year cycle levels. We have 29K, which we've tested. Remember, we've tested 29K, which is effectively the range low of this overall macro accumulation range or reaccumulation, depending on where we see the break occur, towards the upside or towards the downside. And I'm just talking about scenarios here. I'm not trying to give you guys the magic pill and just say price is going to do this. I'm just focusing on scenarios and where is the trend going to break? Where are we going to get that confirmation? And for confirmation of losing 29K, then we're going to start to see price meander in between 20K and 29K, in between this area. Bitcoin could go as low as 20K upon losing 29K, because that's what the 4-year cycle analysis is suggesting to us. And if we lose 20K, then we could go to as low as 13.9K. So it's effectively ranges through the lens of the Wyckoff, or at least through the lens of the 4-year cycle analysis. These are the 2 ranges. And it's all about watching for confirmation, whether we're going to get breaks of those areas. If we lose 29K, then we can start to look at these levels, this range between 20K to 29K. And if we lose 20K, then we can start to look at this range. But it's all about confirmation, because we haven't broken down from this macro consolidation range at the moment. No trend has been confirmed. So even if we do see a death cross, and I'm just going to give you guys an overview of what I spoke about recently, that we might be seeing Wyckoff accumulation on the micro scale on the 8-hour going forward. And it looks like 33K is turning into a support, which is what is necessary for Bitcoin to just enter phase D and move towards the upside. But this micro consolidation might be a means to an end and just effectively just proceeding with macro distribution. And we haven't broken out from this downtrending wedge. If we do, then we're going to rally towards mid 40s over here for that crucial trend decision. But we do have a death cross, and this death cross won't validate going forward if we don't lose this macro higher low, because at the moment we're still keeping it, even though we've lost it very, very briefly, but we're still wrestling to keep it, and we're still inside this macro consolidation range. So as long as we stay above 29K and inside this macro consolidation range, as long as we maintain this weekly higher low, then we're not going to see this death cross play out as it has in the past, because previously in the past we've seen initial crashes from the peak mirror the same crashes after the death cross has happened. So in this case, 53% crash from the peak towards around 30,000, and a 53% crash would probably be repeated after the death cross. But this won't happen if we don't get confirmation of either losing this downtrending wedging channel or breaking out from here and just harshly rejecting from here to validate this overall Wyckoff distribution range to enter phase E. But we're not going to get any of that if we can't lose 29K, the 4-year cycle level. So all these perspectives mean something. They all gel together into a holistic understanding, broader picture of understanding, because yes, the death cross is a bearish event, but we can't see that bearish event take place if bullish supports continue to hold. And at the moment, the higher low is still holding. The macro consolidation range is still holding. 29K as a 4-year cycle level is still holding right over here. And as long as those levels hold, then we're just not going to see further distribution. Through the lens of the macro distribution range that is depicted here on the Wyckoff schematic. And of course, the death cross won't be validated. And mind you, historically, we tend to see the death cross take place 107 to 150 days after that initial crash. But what we've seen now is after 70 days, we've seen the death cross take place, which is substantially sooner than history suggests, because history suggests we should have seen this death cross happen in late July or mid-September, and we've actually seen it happen in mid-June, roughly speaking. So we're ahead of schedule in terms of the death cross. But just because we had this death cross, that's just one signal. It isn't a confirmation of downside because we haven't seen key bullish supports get lost yet. Once they do, then we're going to start to have to look at those bearish scenarios that come together with historical price tendencies through the lens of death crosses, especially that 53% crash that could potentially happen, mirroring that initial crash to the bottom here. That's a historical tendency that tends to occur. And of course, the Wyckoff distribution range, which isn't yet confirmed either, because we have to see rejection from here become quite harsh. Because if we break back in here, then that's invalidation of this Wyckoff distribution range. So effectively, what we're looking for is confirmation that the bullish levels will hold and effectively invalidate all these bearish scenarios that seem to be creeping up, whether that's the Wyckoff distribution range or whether that's the death cross. But zooming out, we're still holding key levels. This is candle 4 resistance now playing a part as candle number one support. And that's quite positive, and we just need to see this hold going forward to invalidate all these bearish things that are starting to appear in price at the moment. Thank you so much for watching today. Subscribe to the channel for more videos like this in the future. I'm Rekt Capital. I hope you have a fantastic day going forward. I'll speak to you in the next one.